Hey, good night, everybody. Good evening. Still here, Daily Market Pulse, Thursday, January 30th, 2014. Only one day left. One for to complete the week, but also to complete the month. It's usually gets a little, can get a little wonky, right? Because large investors, institutions are doing funny things with their accounts when the month closes out, and so it just happens to be a Friday at the same time. Of course, things get worse usually when it's the end of the month and quarter in particular. But certainly right now, end of the week coinciding with end of the month at the same time. So let's take a look at the charts. We saw the stocks rebound today, coming off what may have been support levels. We talked about it yesterday. What were they going to do? I still had felt that the markets had not rebounded significantly enough, and they needed to come up to at least a 38.2 retracement. They had not yet done so. They may have now, and they may still want to reach for 50%, but they may have had enough already. It's possible. So let's go take a look. So Dow Jones, you see the big decline, huge drop into that lower pivot area, just around 15,750. Um, Decent bounce a couple of days ago, and then a huge thrust to the downside yesterday, and then it held there today. Now, no new highs compared to the last several days, but just a reasonable bounce nonetheless. And then really the first day where it closes finally above the Bollinger Band, that lower Bollinger Band. So it did 5 consecutive closes below the Bollinger Band. At some point, you have to imagine it's going to bounce. And this makes it a logical place just because there's a pivot area there. And so in terms of a bounce, you're still looking for maybe into the 8 moving average, somewhere in that vicinity. Where that retracement actually lies. So otherwise, if it starts to fade below, then you're looking at 15.4 to 15.2, maybe as deep as 14.800. But one step at a time. Bounce first, or at least continue the bounce for the time being, most likely. Okay, S&P, there's the pivot area there as well. We had a former high, then some series of lows where the 50-day moving average was mid-December. Happens to coincide there as well, sideways. Last 4 days, right at 1775. We've talked about that level multiple times. Now it's just 4 days range bound. Look at that. Red, green, red, green. The lows, the highs, not exactly the same, but essentially range bound 4 days sideways. And having met essentially the high today, pretty close to that 38.2 retracement from the high to the low from yesterday. So it's pretty close. Could still inch up a little higher perhaps, but I'd be looking for a fade from this point, 1800 round number, which is what it hit, I believe, today, as I recall. Well, 1798.77, close enough, but it might still want to hit 1800 and maybe even push into 1810, 1815 potentially before a possible reversal to the downside. We'll see how they behave here going forward. This one also, if it drops below the lows and drops below 1775, 1760 where the channel line is. Below that, you got a window at 1740. You got another pivot area down in the 1600s, but one step at a time, as mentioned with the Dow. Okay, Nasdaq came into the 50, has not essentially, well, it closed yesterday below the 50, but that's the first time. So that area right across you, that goal line I've drawn in here, 4070, and the first close below the 50-day moving average since October, but not much there. And then a rising window today, very large gap up into the 8 moving average. This also has retraced substantially, where it could go maybe a little bit higher, but pretty much this could be the end of the retracement potentially. We'll have to see how the futures go and how they open up tomorrow morning, but this could be it. The 20 is already rolling over and pointing down. So now this price action is caught between a couple of significant moving averages, the 20 and the 50. A drop below the support area here takes you at least minimally into 4,000, another nice round number, bottom of the channel, possibly even deeper than that to 3,900 or lower. We'll see how that goes. And the TSX for our fine Canadian friends coming off the polarity change at 13,500. That 50-day moving average coincided. It was a bounce a couple days back. On Monday, Tuesday it went higher. Yesterday, kind of sideways, and then today even higher, but into the 20 and the 8 moving average as well. 13,750 again, retracement wise, pretty much done. Could go a little higher, as I said before, into maybe a 50% range, but for the most part, it's possible this could already be over. So a drop below support 13.5, then it takes you to the next level of 13,100 with a slight pause, maybe at 13,300. If it goes higher, then ultimately you're going back to the looks of maybe 14,000 on the upside, if that's really what's going to happen. New York Stock Exchange holds the support level, bull sash, a little bit of a pause yesterday, another gap higher today. So again, this has a little bit more room to date moving average as well as the percentage retracement. You see there's a window. What is that? It's 10,220. That happens the other pivot area as well. The highs, another window there, window. So that's going to be a significant area if it ever gets to 10,200. But not fully anticipating that's going to be the case. But this is fairly bullish for the most part, but not a strong confirmation as of yet. Okay, Treasuries climbed right on through the 200-day moving average yesterday and then held that, essentially tested that area, tested the dark cloud cover, the last several highs essentially in the breakout area above this 200. Tested that at the 133 and then pushed right off back up to where it is currently, just a little bit over 133 right now, and looking like it's threatening to climb higher again. And the ultimate goal, as we said before, the target was 134, so we're still looking for a 134 target. Then it might take a pause of more significant magnitude. The yen is comfortable right now, just consolidating above the breakout area as well as above the 50, which is still declining. And of course, now we just got a cross over the 8 over the 50 as well. So the overall trends are not super strong. The short term is fine. But the fact that it's holding above support is fine as well. It can do this for even a couple more days. I'd be fine with that. But I'd still be looking for a higher move into 99 and 1. I can't see this thing dropping, but if it does, it may test the 20-day moving average. Gold sank pretty hard, but it is also stuck essentially going sideways between 1280 above and the 1245 below, and the 20 and 50-day moving average is below as well. So the 8's above the 20, 20 now has crossed over the 50, adding strength. The 50 is still declining, so just that longer-term intermediate trend is still posing a little bit of a problem. The fact that price action is above is a good sign. As long as it holds here, I'm comfortable with to think that the gold has a chance to go higher back to 1280 and then perhaps surpass to go thrusting into 1340, 1350, 1360 potentially. We'll see how that goes. But obviously, if it closes and starts to break down below 1235, then look out below. Look at 1220, and then obviously into the 1180 to 1200 range once again. Now, if silver is any inclination or preview what gold might do, then it's come right back to 19 today, dropping lower significantly. So it's still straddling and holding the 19 and resistance above at 2050, and we will see if this is going to be truly support here in this oversold state or not. Okay, crude. Similar to what we saw with the Treasuries, thrusting up, holding above moving averages right now above the 50 and the 8 moving average and pushing higher quite a bit nicely today, breaking out across the highs of 97.50 to 97.75, broke out quite frankly quite nicely. There was several days going sideways across that level, and it finally broke through. Bollinger Band on both upper and lower are both starting to open now, so the volatility is increasing, giving it some room to go. The odd thing here, of course, is the 20 crossing below the 50 and the 8. So you have an 8 followed by a rising 50 by declining 20. The 20 just now is starting to slow down and taper off and go sideways. So a little odd, but that's why if it's going to go up, it's going to go kind of choppy. It broke out today. It may come back and retest 97.50 to 97.75 possibly, but we're still looking for upside into 99, went to 101, and we'll see how that goes. And after a huge thrust into the 1272 extension on the natural gas, we saw a massive reversal today, and happened to be the day when inventories were released, of course, as well. So a big drop at some point, with price being as high as it was relative to the 8, the 20, and the 50. At some point, there's going to have to be a retracement. It got a little on the parabolic side. It was already well surpassed its measured move, and so one might expect at some point this has to taper off, and so there it is now. Dark cloud cover, look for another still, because the bulls will want to step in at lower prices. Look for this to kind of stabilize and possibly bounce higher again, at least temporarily anyway. And with respect to small caps, that risk on, risk off. So this is right back to the 111.50, 112 area for support. It bounces like we saw everything else for the most part right into this retracement level as well. Nothing really earth-shattering here. This might be the end of the road in terms of possibility of a rollover back again to go lower. Look at 112 and below 111.50 for sure as a support area to drop back into 109 to 109.50. If it can muster up some enough energy and momentum to go higher, then you're looking at a close above 114 to really have a shot at 116 and higher if it can manage it. and our friend the VIX. Well, the VIX gapped lower as the markets gapped higher, which you can see it had closed a couple of days, 3 out of 4 days above the upper Bollinger Band. So it was bound to retrace, especially at a resistance level of 18 and 19. It dropped, but immediately reversed back up. It's got a window there still, so it's forming an island all by itself. So making a dance, just like the markets are making a dance. And so it's a question now. The next tomorrow will be important. End of the week, end of the month, and then of course Monday, Tuesday becomes important because how are they going to shift their funds, and how is that going to affect the markets? But mostly we're looking at consolidation for the most part. I'd call it consolidation on the VIX, which means it could very well go higher from here. If that's the case, we know the markets are going lower. That's still my anticipation for the time being. Anyway, we'll see how that goes.